Dirty dealings, corporate battles, consumer woes. This is Evening 5. Bank Negara Malaysia announced a slew of interim measures to address rising medical insurance premiums. These include spreading out premium hikes from now to 2026, which means at least 80% of policymakers should see yearly premium adjustments of under 10%. There will be a one-year pause on premium adjustments for those aged 60 and above, starting from their policy anniversary. Meanwhile, individuals whose policies lapsed this year due to premium revisions will be able to reinstate their coverage without undergoing additional underwriting. Additionally, policyholders who opt out of the repriced plans will have access to alternative medical and health insurance or takaful products at comparable or lower premiums. These alternatives, which require no underwriting or switching fees, will be offered by insurers and takaful operators by the end of next year. BNM said the government, insurance companies and private hospitals will also contribute 60 million ringgit to advance health reforms, including the development of a base insurance or takaful product for those above the age of 60. BNM Governor Datuk Sri Abdul Rashid Ghaffur said these interim measures will provide policyholders some reprieve, but broader health reforms must be expedited with a commitment to achieve clear outcomes in the coming years. Hong Leong Investment Bank has concluded that the 11 ringgit per share takeover offer for Malaysia Airports Holdings from the consortium led by Khazanah Nasional and the EPF is not fair, but deemed the offer reasonable in the absence of a competing offer and advised MAHB's shareholders to accept the offer as it represents a chance for them to realise their investments in the airport's operator. HLIB, which was appointed to assess the deal, deemed the offer not fair because the 11 ringgit offer price represented a 12.77% to 19.77% discount to the estimated value of between 12 ringgit 61 and 13 ringgit 71 per share. It did note, however, that the offer price is still a premium of 6 ringgit 11 cent or 24.95% to MAHB's latest unaudited net asset per share of 4 ringgit 89 cent as at September 30th. Non-interested directors do not agree and recommended that shareholders reject the offer. The unfair offer price aside, Datuk Muhammad Hussein, Ramanathan Satyamuthi, Cheryl Koh Hui Peng, Datuk Sri Koh Peng Kang and Chris Chia Woon Liat said they strongly believe the offer is not reasonable due to MAHB's current growth trajectory and future prospects, with its ongoing and planned initiatives for development. They are also concerned that the delisting of MAHB would reduce transparency, accountability and the ability to raise capital from public markets. Shareholders now have until January 8, 2025 to decide on the offer. There will be no increase in electricity tariff for all users in Peninsular Malaysia from January 1st to June 30th, 2025. The Ministry of Energy Transition and Water Transformation announced that Putrajaya is maintaining the current base electricity tariff for the period and is not going to make changes to the current rates of rebates and surcharge on the tariff based on the imbalance cost pass-through mechanism. This will cost the government 2.39 billion ringgit in subsidies. In a statement, the ministry also said it will introduce a new tariff structure from July 2025 onwards, having agreed with the base tariff for the next 3 years. This upcoming tariff structure is being finalised and will reflect real costs of electricity supply and be more competitive while maintaining the stability of the energy trilemma of security, sustainability and affordability. The financial implication to the government from this new tariff structure will be 3.57 billion ringgit, the ministry said, without elaborating further. Top Glove Corp returned to black with a net profit of 5.47 million ringgit for the first quarter of FY 2025 from a net loss of 57.71 million ringgit in the corresponding quarter a year ago on higher sales volumes and increased foreign exchange gains. The world's largest glove manufacturer's revenue for the first quarter of FY 2025 surged 79.5% to 885.89 million ringgit. The company also saw improved performance on a quarter-on-quarter basis, rebounding from a net loss of 3.57 million ringgit in the fourth quarter of FY 2024 as revenue grew 6.1%. Top Glove did not declare any dividends. It is optimistic about its prospects, citing recovery of the glove industry and trade diversion benefits from the US tariffs on Chinese-produced gloves, which should be more substantially felt from the second quarter of FY 2025 onwards. Top Glove also plans to diversify risks across its operations in Malaysia, Thailand and Vietnam to mitigate the impact of an escalating and unpredictable geopolitical situation. Top Glove Managing Director Lim Cheong Wan hailed the group's performance in the first quarter of FY 2025 as a significant milestone in the company's recovery and growth journey, and said the company is well positioned for accelerated growth towards re-establishing its leadership position. Johor Plantations Group appointed Tanjung Langsat Development as an earthwork and main infrastructure contractor for its integrated sustainable palm oil complex or ICEPOC project in Johor for 39.04 million ringgit. Located in the Pasir Logo Estate, Kota Tinggi, ICEPOC will integrate various stages of palm oil production, scheduled for completion in the second half of 2026. The complex is aimed at enhancing efficiency, expanding the plantation group's value chain and product offerings, improving cost effectiveness, and strengthening its competitiveness in the palm oil industry. It is also expected to drive economic growth, create jobs, and solidify the group's position as a key driver of Johor's economic transformation. The contract is deemed as a related party transaction, as Tanjung Langsat Development is a wholly owned unit of TPM Techno Park, which in turn is a wholly owned subsidiary of Johor Corporation. Gulai Malaysia, a wholly owned unit of Johor Corp, has a 65% stake in Johor Plantations Group. Shares of Johor Plantations Group fell 1.56% to 1 ringgit 26 cent, valuing it at 3.2 billion ringgit.